We are finally back on the channel, boys. I know it has been 10 days, roughly, since I've had a video to upload. Today, we took our first trade in 2 weeks, third trade of the month. Um, Kind of crazy to even say, considering I traded pretty much every single day in February and March, and now here we are with April. 3 trades in, 2 wins, 1 loss on the month. Could be better, could be worse, but that's not what we're here for, right? Let's get right into it. As you can see by the title, I made just under $10,000 today. I don't really like saying it like that because technically I only made a little bit over 500 per account, but this was across 18 Apex accounts, so yeah, 10,000 roughly sounds good for the title, and technically it's what I made when you look at my TradeZella, TradeCopia, whatever, 10,000. But just keep in mind it's really only 500 per account, and that's what happens with a lot of traders. They'll tell you they made $10,000 today, when in reality they're copying 20 accounts and they made 500. So it's a lot easier to make 500 in a day across 10 accounts than it is to make 10,000 across one. That's just math. I don't know what to tell you. Coming into the market, every single person and their mother was bullish. If you weren't bullish, you might be blind. I mean, I really don't know what to tell you. If you took shorts today, maybe rethink trading because this is the daily chart. I mean, 3,000 points in 2 weeks. We've all seen this happening. Like, we've all seen the insanely strong bullish momentum, zero pullbacks. It's just the most bullish thing I've ever seen in my life. I haven't taken mini trades this month because I was bearish, as many of you were. Scaling down to the 4 hour, we would want to see some sort of retracement from here into this massive, massive, massive gap, maybe even a little lower. Then we can continue up, then retrace, then continue up, then retrace, then continue up, right? That's what everybody kind of wants to see. That's what normal price action looks like, but we're not in normal times. We are in Trump markets, we are in war times, we are in all-time high targeting distance. So that's kind of what today's trade idea was partially based off of. Back again on the daily time frame, you can see all-time highs up here is still a ways away, 800 points, 700 points. As of now, as of yesterday during the trade, it was about 1,000 points away. So it's not immediately on the scope of things, but it is definitely within striking distance within this week or next week. ES is definitely stronger. It looks like it's going to hit all-time highs overnight, tonight. By the time you're watching this video, it might have hit all-time highs already. That would be something. That'd be unfortunate, but we'll get to that when we get to it. However, on the charts here, there's nothing to target besides all-time highs and previous month's high, or not previous month's high, sorry, February's high, which is what I did end up using as my draw on liquidity today. So February's high was my target. And you're probably asking, Noah, why are you longing when we're in such a high premium? If you just, if you look at the range, we are as premium as you can get. Like, we're literally buying at the top, right? However, in order for us to be in discount on this range, we'd have to drop nearly 1,700 points. That's not happening. So instead of waiting to be discount of the entire range, I'm going to look to buy in a discount of the current intraday range. If that makes any sense, I'm going to break it down even further so it makes much more sense. Anyway, coming into market open, we had these data wicks. Not really sure what news dropped, but they are absolutely prominent wicks in the market. So that's something you want to be targeting. So hopefully in an ideal world, I was looking to open lower, tap into this 4 hour, which we're currently in a little bit before open, come back up to target these data wicks. That was the trade idea that I was looking for off of open. There's also a 4 hour somewheres down here, just in the midst of things. Bunch of 4 hours unfilled right there that we could have retraced down into, and I would have been okay with taking a long off of still. So price opens and we go down off open immediately. And unfortunately, I did see some people take a short position here. I have no idea what you saw besides a 1 minute inversion fair value gap. The short was awful. I mean, it really was. It was just a pattern trade, and this pattern trade is just so low probability, because sometimes pattern trades can work out, right? That's just a gamble, though. This one, unfortunately, is so low probability because of the overall bullish momentum that we have and the strong drawn liquidities being these data wicks right here. Had we swept the data wicks, let me get rid of this position tool first. Had we swept these data wicks right here, and then formed sort of a Judas swing 930 open idea here, this would have been a much better short position as opposed to this first one right here. And if we play price forwards a little bit more, you will see that's actually exactly what happened, right? We do nothing, we come up, sweep these data wicks, and then we start displacing lower with strength, with volatility, right? You can just see the candle size, just look at it, right? We're displacing with strength. And then we get this 2-minute inversion right here, actually creating a 2-minute balanced price range. So had you taken something like this, maybe targeting pre-market lows, this would have been a much better trade. A lot higher probability, still low probability because of the insane bullish momentum that we're on, but a lot higher probability due to swing idea. Market opens, manipulates higher, takes out these data wicks, displaces lower with strength. That's what we got, right? Maybe you would have gone break even if you took this at market open 930 low right here. So it would have been a great break even points. And then you would have got stopped break even, right? We play price forward, stop break even. Okay, so those are the two trades that I faded off of open. If you guys know me, if you know my model, you know I usually don't take trades off of open. And one key factor that I do want to see in trades is momentum, speed, displacement, and specifically I want to see that in the form of a 5-minute fair value gap. So now we switch over to the 5-minute time frame now. Where is the 5-minute fair value gap? I mean, can you guys, am I blind? Do I have to zoom in or something? There's nothing, right? So when there's no 5-minute fair value gap created, it's 9:45. I'm not looking to get into anything right now. If I didn't like the Judas swing idea, then my next play is going to wait for 5-minute distribution towards a next draw on liquidity. And if we zoomed out onto the monthly time frame, the closest thing minus all-time highs is February high. So at the moment, we were still a decent chunk away from February's high, right? We were still 200 points away. So I'm not going to long from here and try to catch 200 points, because right now, in this immediate moment where we are right now, this February high is not confirmed. For me, it's not confirmed yet. If we are going to displace towards it, right, then that's confirmed for me. So I'm just going to wait. Like, I waited 7 trading days without taking a trade. I can continue to wait more until I see something that I like. So what do? I just sit here and I wait, right? Next 5-minute, no fair value gap. Next 5-minute, no fair value gap. Next 5-minute, no fair value gap. You see the trend here. So I'm waiting and I'm waiting and I'm waiting. And to be honest, I'm ready to call it right here after 10 a.m. because there's no displacement. There's no true displacement in the form of a higher time frame, 5-minute higher time frame, fair value gap. The 15-minute, also no fair value gap on the 15-minute. One does open up soon, you'll see it, as well as a 5-minute. But let's just keep playing price out, right? So I'm just waiting, nothing for me. At this point, I'm sitting on the 5-minute time frame because I don't want to get faked out on the 1-minute time frame. I don't want to possibly take a short after this inversion right here. We didn't really sweep anything, so I have no idea why you would take that short. But if you trade momentum, maybe you take this short. Anyway, I don't want to get faked out on the 1-minute time frame, so I'm just sitting on the 5 because I know there's no trade for me today without a 5-minute fair value gap. So why would I not sit on the 5? Make it make sense, right? Make your life easier for yourself. Just sit on the higher time frame. You're not going to get faked out into a trade. So I'm sitting on the 5-minute, just waiting. Oh, what's this? A 5-minute fair value gap. I'm all in, right? I see this 5-minute fair value gap. I go down to the 1-minute. I'm looking, okay, Let's see how far away are we from this February high? 113 points. Okay, that's manageable. We can go 115 more points. If you just zoom out, staying on the 1 minute time from here, I mean, look at this. We have room to go another 100 points in this momentum, don't you think? I think so. Um, so look at market open. How much have we distributed? 149 points. At this point, for us to continue 100 more points, I'd want to see a 5 minute retrace, which is my model. That was in my last video, the 5 minute continuation model. So now we wait on the 1 minute time frame. We see this 5 minute fair value gap. For myself to get an entry, I need a retrace into the 5 minute fair value gap. So we wait and we wait and we wait. That's all we're doing. We're waiting. Now, this is also key. As you can see, I have the fib tool here. From this low to this high, these are the series of 1 minute candles that made this 5 minute fair value gap. Therefore, anything below 50% is discount, right? So I would be willing to buy if we tapped discount of this immediate range. That's it, just this immediate range. Obviously, we are not in discount of this entire day, right? Low of day or New York session discount would be down here. And we are hardly in discount of this entire bullish move. That's not what I'm asking of today's price action, though. All I'm asking is to be discounted of this one displacement move. That's it. This is the only move so far in the day that has created a 5 minute fair value gap. If I'm going to buy from this one displacement move, I want to be in discount of it. Now, my entry doesn't have to be exactly in discount of it, but we have to tap into discount. Then I can get my entry. Ideally, I would be entering in a discount, but that's in a perfect world, right? So I draw my fib tool out. Let me show you guys in case you don't know, from the low to the high, right? Swing low to the swing high. Now, I didn't know this was a swing high at the time. Obviously, I know in hindsight because the day is, nearly 12 hours ago. But the low to the swing high, and then I watch price play out, right? Watching it play out, we get strong retracement down. Now, this is actually what I'd want to see, right? Some of you may be thinking, Noah, why would you long after we just got this strong 2 minute series of candles that dropped us 35 points lower very quickly, as opposed to all of this slow lethargic building up? And it's because this strong move down could potentially fake out other traders. And I've said before in the Discord that the best trades come after everyone's been stopped out. So if for whatever reason this strong move convinced you to get in, right? Maybe you had a high, low, higher, high, lower, low breaker block entry right there. Maybe you just had the order block entry, you had the inversion entry, you had the CISD entry, had a failure swing entry, Doge candle entry, rejection block entry, whatever. There were lots of entries to potentially go short after this displacement candle. Now, what you were targeting, it's beyond me, right? Maybe you were targeting all of this low resistance liquidity, or the unfilled 4 hours, the 930 low, whatever it was. For any reason, people would get in short here. I can see it. You could make an argument for getting in short here. It would be a bad argument, but you could make an argument for going short here. So that's confluence number one, right? Sorry, that's number two. The first confluence is the retrace. The second confluence is the potential fake out. Because if we're going to fake out people here, then they would place, if you're selling, you'd place your buy stop here to get out of the position. So we come run those buy stops and continue higher. So it's just a little bonus added confluence. Okay. So what I'm waiting for here right now at 1041 is a couple things. One, we see this line here is 1050. That's the second macro. So I'm waiting to see, well, we're approaching the second macro. That's one of my key points I made in my first video, is that you want to be in a trade when we're approaching or during the macro timeframes. That gives the best chance to deliver in smooth one directional movements. So I have that marked out, and we're approaching it, 1041. Obviously, I would like to take it closer to 1050, but 1041 is close enough. We got our retrace. We're going to get our displacement out of it. If I'm going to be in the trade, we have to displace out of it in the form of a CISD. We have this 1 minute inversion here. We've already inversed this small volume imbalance, which I don't really care too much about, but it is a good sign. Inverting volume imbalances towards the direction of your drawn liquidity is always a great reversal confluence. We have this fat bearish fair value gap. At the time it was bearish. Obviously it gets inverse, but at the time this is a bearish fair value gap, so I want to see that get inverse. And then I just wait, right? No entry for me yet. Play the next candle. No entry for me, obviously. But what we do have, right, is we are displacing with some momentum in the form of a bullish 1 minute fair value gap right here. You see we open, tap into it, respect it, and then we displace, okay? So I think this is a perfect valid entry, right? I think this is a very valid entry. It'd be a little bit earlier than me. I wanted to see the CISD. We sort of wick this and then reject it. I was not too pleased with that, but this was a completely valid entry. Why? We got the 5 minute retrace, right? Got the 5 minute retrace, started displacing out of it. You can tell it's displacement because we create this fair value gap. We leave it behind. We respect the fair value gap as we tap into it, and then the next candle we engulf this, creating the order block, right? Creating this order block. So now we have bullish momentum. So if you wanted to take this trade right here, after all of the other confluences aligned, go for it. I think that's a great entry. Me personally, I didn't like it that much. I always want to wait for the CISD, so I just waited, right? Next candle, not the best candle. Not the best candle. That is not what you want to be seeing if you want to get in a long. So I waited again. Not the best candle either, right? Yes, we get the CISD. No, it is not a strong CISD. I like the wicks. I like the rejection wicks here, but it is not a strong CISD. So I just wait again. There's no harm in waiting, right? I'm trying to catch a move, another 85 points. We are not going to displace 50 points and give me a horrible entry right now because we're just slowly trending up. So in my head, the next couple of candles should just slowly trend up and then I'll get in, right? There's always a chance the next candle starts trending lower and then I'll just wait, see if we get another order block, see if we get another CISD, another IFG, something like that. So I just wanted more and more confluence. And guys, if I've waited 7 days to take a trade, I can wait one more candle for one more additional confluence. So we get the next candle. Not a great candle. Let's just be honest. This is absolutely not the candle you want to be seeing if you're looking to buy right now. It's weak. It's a Doge candle. It has indecision. It doesn't want to go anywhere. It's weak. So I wait again, right? You can see what's going on here. A lot of waiting. And we get this candle, right? And some of you may be thinking, ooh, red flag. I really want to see that candle. I think it's a great candle, right? We've got the devil's mark here, no top wick. We tap into this order block, strongly reject out of it. Also, we have this blue line, very hard to see, opening price of 1030. 1030 opens, manipulates lower, and the idea is we're going to distribute higher, right? Open, manipulate lower, distribute higher, close. Something like that for the 1030. That was the idea. Which is why if I see another confluence that tells me to go higher, like an order block closing above this candle, I would say this is a protected low that I could put my stop loss at. Already it's a protected low because we tapped into the fair value gap, respected the 5 minute fair value gap, and then closed above, creating the CISD, which by default makes this a protected low. But if we have the 1030 open, low, high, close in play, then it makes it an even higher confluence to be a protected low. So that's what this blue line is here for any of those wondering. OP, opening price. Don't have it marked out all the time. Only really have it marked out when I'm trying to use it as an extra confluence. In this case, because we manipulated below the opening price, I'll say it one more time, and have now closed above the opening price, I wanted to view this as open, low, high, close. So currently that's what we're doing. As long as we don't close back below this opening price, I'm fine with anything in this area. So play out one more candle. What do we see? Beautiful order block off this candle right here. Strong change in state of delivery, right? It's just the strength that I wanted to see. So that's the candle that I entered on, right, at 1048, almost 1050. We should start to deliver in this 1050 macro. Unfortunately, as you see by this P&L tool here, I got in at 1048 and I left at 1218. So it took me an hour and a half to finish this trade, right? That's a that's a long trade. Um, I checked my TradeZilla stacks, and my typical trade typical length I hold trades is around 5 to 15 minutes. So an hour and a half was definitely a long hold for me, definitely a long hold. But now I'm officially in the trade, so we can play it out a little bit quicker and start seeing how price moves. Immediately, right, we get this nice displacement, 16 points. It's nice displacement in the grand scheme of things right here. On any other normal trading day, 16 points really isn't great displacement, but because we're trending slowly, 16 points is nice displacement in relation to these small bodied candles. So we get nice displacement. Go into a little bit of a higher time frame, 15-minute. I look to the left of me, and we're in a wasteland, right? We're in between a 4-hour fair value gap, bearish fair value gap. I have nothing to really go break even off of, if this is where price is right now. I have no real break even points, which is fine. I'm just not going to go break even until the market gives me a reason to go break even. And my logic is I would typically go break even at a 1-to-1, or I would go break even when the trade becomes no longer valid for us to continue retracing. So if I'm in this long, I want to go break even at a point where I don't think price should go any lower, right? If we start to go lower, my idea is just invalidated, right? Same thing with the stop loss. You have your stop loss because if price comes below, your idea is invalidated. That's how I view the break even point. So you'll see in a minute, I've got this line here. You'll see where, in fact, I do go break even at. So I'm sitting in this trade. Things are looking nice. Up in a little bit of profit, not really in drawdown at all, as you can see. With the 5-minute continuation trades, you don't really go in drawdown unless the trade is going to lose. That's a little bit of sauce that I'll share with you guys. If you find yourself sitting in drawdown for the majority of your trade, it's probably going to lose with this model, right? Like, that's just what I've learned with my statistics. That's what I've learned taking this trade over and over and over and over again. You should be in profit for the majority of your trades. Okay, just a little bit of sauce. So, as you see, we have this break-even point marked out. Why is this a break-even point, Noah? Well, you're about to find out. What do? We start displacing lower. Ooh, scary. Why do we start displacing lower? Because the 11 a.m. candle opens. 11 a.m. opens. Sorry, actually opens up here. Bearish candle. 11 a.m. opens. So the idea here is open, low, high, close. Same thing with 10:30. Open, low, high, close. 11 a.m. I'm praying, right? Praying for an open, low, high, close method to happen. So I'm fine sitting in this trade, right? Sitting in a little bit of drawdown. I have things protecting. I have the inversion. I have the CISD. I have the order block. I have the other 5-minute fair value gap that opened up, right? Extra confluence. I'm in this trade because of the retrace into this 5-minute fair value gap, and we get displacement out of it in the form of another 5-minute fair value gap. So that could be a point where you can add in another contract, scale into your positions if you get the opportunity to. So we have this 5-minute fair value gap, and I'm going to play this on the 5-minute time frame so you can see what it looks like. We respect it. We close here. We tap in and we respect it. We fail to close below it. We fail to close below consequent encroachment of it, the CE, whatever you want to call it. And we respect it. At the same time, right, down on the 1-minute time frame, we retrace into this order block here. What else do we do, right? Take our fancy fib tool again, draw it from the swing low here to the swing high here. Of this immediate range, we tapped into discount, 50%. Things looking good. Going to keep this fib tool here in a minute because of this area here, which is key. So let's continue playing price out, right? Okay, nice displacement. Right here is where I went break even. Why did I go break even? We retraced in this area, reswept the high. Right now, there is no reason we need to revisit this low here. And chances are, if we come tap my break even here, we're going to revisit this low here. So I just went break even. I'd like to see us go higher now, right? Look how strong this is. This is a perfect V-shaped recovery, whatever you want to call it. This is great displacement. This might have even been a better trade, right, to take than this first one. Might have even been a better trade based off the 11 a.m. open, low, high, close, right? Open, low, high, close. That's the play that's going on here. So I'm break even at this point, completely risk-free trade. Great feeling. Everybody knows going break even is a great feeling in a trade. So let's continue to play it out, right? Nice displacement. Chopping around a little bit. Nice displacement. Now, what happened here? Oh my gosh, would you believe it? Another 5-minute fair value gap. Now you're probably asking me, Noah, we inversed the fair value gap. This 5-minute inversion is off of nothing. We didn't sweep anything. We didn't tap into a higher time frame fair value gap that we already weren't in. So this is purely manipulation. This inversion is purely manipulation. Some people might enter shorts here, which is even better for me because they're entering shorts only to get stopped out to continue the buying pressure. So I'm fine. I'm fine with that manipulation. And if you go on the lower time frame, it's so beautiful. Let's take our fancy fib tool again from the low to the high, right? 50% discount. I mean, displace, retrace, displace. This is what I said, I don't know, 30 times in my first video. Let's go back from the beginning. Displace, retrace, displace. Displace, retrace, displace. Displace, retrace, displace. It's really that simple on a nice trend day like this. I mean, it was beautiful. You could have added in your position here, right? Here we get the CISD entry there. Add one more contract, nice. So I'm gonna keep this fib tool here because as you notice, we've got a little interesting area here. All of these -1 standard deviations, which is really the only thing that I care about when it comes to standard deviations. -1, -2 for targets when you don't have anything you want to target. And what is in this box filled with all of these -1 standard deviations? If we're respecting all of these ranges, I know it looks a little bit messy now, but if we're respecting all of these ranges, all these 50% discount marks, and we're going to come up and target these -1 standard deviations, what is inside of that? Well, it's February's high. Right? The strong drawn liquidity that we've been trending towards, it's February's high. So chances are, as we come to these -1 standard deviation marks that we have the possibility to reject and reverse off of, we're going to hit this February's high because we have one here, we have two here that are pulling us. We're going to hit this February high. Now me, I'm not going to get edged. Pause. I'm not going to get edged, right? I'm targeting this first -1 standard deviation. And if I get rid of the other two, you can see which standard deviation I'm targeting. It is the first 5-minute retrace that we got, the one that I got my entry off of. That's the standard deviation that I'm targeting, right? 85 points, 84.5 is much more than what I need. It's a nice 1 to 2, great risk to reward, 1 to 2, perfect for me. Could I have held to this February's high? We're going to find out in a minute. And if you traded today, then you know, obviously I could have. Yeah, but this is 10 points, 85, 95. That's $40. I was in this position with 3 micros. Sorry, it's not $40. 10 times 3, 6, $60. I don't need the other $60. I can take $510, and be fine. 570 would be cool, but 510 is more than enough for me, considering I risk anywhere between 250, 350, something like that. So 510 is great. But as you can see, the game plan of today was just displacement, retracement, displacement, retracement, displacement, retracement. Don't get too freaked out on these heavy retracements. I know me personally, I was kind of freaking out in the chat. I was sitting break even, so I had no reason to, but mostly my psychology levels were a bit weak because I didn't trade for 7 days because I didn't see anything that I liked. So I didn't really want to lose the first trade that I took after 7 trading days of fading setups, right? Even though I couldn't have lost because I was break even, so that's just a weak part in my psychology personally. But displacement, retracement, followed by displacement again. I mean, it's just beautiful. And at this point, I don't have it marked out. We're coming into the 1150 macro, which is really the latest I'd want to be in a trade. As you know, in my first video, the latest I'll enter a trade is the 1050 macro. So I got in at 1048. So I got in pretty much at the latest, and I've been holding this trade for a while now. It's getting a bit crazy. So we're approaching the 1150 macro. Zoom back in for you. We're getting nice displacement, and then 12 a.m. hits, right? That's 1150. Sorry, a little bit more. Deep retracement, right? 12 a.m. hits, and we actually get a SMT right? We get an SMT at this low. If we go over to ES, we swept this low on the S&P 500, making an SMT. This is the 1132 low, right? 1134, 1132, whatever, same thing. We swept this, making SMT. At the same time, we have a 5-minute fair value gap. Once again, I mean, could it be more perfect of a day? A 5-minute fair value gap. And what do we do once again? We tap into discount of this range, right? What else do we do? Let me get rid of this fair value gap. We have our 12 p.m. open, low, high close idea in play. Lots of things pushing us higher. This SMT really was an obvious SMT. If you checked on ES, we were trending lower very strongly after we made, I don't know, 8 equal highs right here. Absolutely ridiculous, right? I was actually saying in the Discord how ridiculous that is because I was just dumbfounded at how we didn't wick these one time. But because we didn't wick it, it was just super obvious that we were going to come back up and absolutely blast through it when we do eventually come back up, which is obviously what happened. So we put in this SMT at 12 p.m. and then we just displace straight to the draw. Boom, out right there for the -1 standard deviation for 85 points, $510 per account. And as you can see, had I held to the actual draw on liquidity, the February high, it gets hit. And then we sell off, right? It gets hit and then we sell off. So that was the trade for today, boys. Like, sometimes the best thing you can do is just wait. I waited 7 days, 7 trading days. Yes, I took my first trade when we first opened up the month, whatever the day was, Tuesday, and then I took my second one on Wednesday for the first days of what month are we in? April? Yeah, for the first days of April, I took my first 2 trades, and then I haven't taken a trade since, like 7 whole trading days, because I don't like this whole range, right? I don't like this strong bullish move, because for continuations to work, we have to be in a trending market, and to be in a trending market, we have to make higher highs and higher lows, displace, retrace, displace, retrace, displace, retrace, and so on. That's not what we're in right now. I would not call this a trending market. I would call this a bull run, a pump and dump scheme without the dump. Like we're literally just pumping, pause, like that's it. This is not a trending bullish market. This is just a pumping rocket ship to the moon, to all-time highs immediately market, which is why my model has not been forming so often. I'm glad it hasn't been forming and not playing out. The times it has played out, it's formed 3 times, which is why I've taken it 3 times, and I have 2 wins and 1 loss on the month so far, so can't really complain too much. That's a 66% win rate, super small sample size, obviously super tiny sample size. But yeah, that's gonna be it, guys. I hope you enjoyed. I know it's been 10 days since I've made a video. I'd like to say that's on my fault, but it's really just the market's fault. I mean, there's been nothing for me to take at all, nothing of high probability for me to take, partially because I was looking for shorts for a retrace play that never ended up happening. As you guys know, if you traded the markets, we've just been pumping every single day. Just put a blindfold on and press buy. That's not financial advice. Obviously, don't do that, but if you did do that, you'd be looking great. So that's gonna be it for me, guys. I will see you hopefully tomorrow if I take a trade, right? If I take a trade, I'll see you tomorrow. If I don't take a trade, you won't see me for, who knows, 5 days, 10 days. But yeah, see you guys later.